Hello all, this is Damini, co-founder of VMix Scholars. I welcome you to the 32nd episode of our web series Loanflix Season 2. For those of you who are new to my channel, let me tell you Loanflix is a web series which covers each and everything of an education loan, right from the eligibility, process, loan disbursement, loan repayment, everything. And Loanflix is an initiative of VMix Scholars. VMix Scholars is an organization which is funded and supported by the Ministry of IT, Government of India under their Digital India initiative. And VMix Scholars' sole purpose is to help students like you get an education loan for your higher studies. And let me make it very clear, all the services of VMix Scholars are completely free of cost. So if you have directly landed on this video and haven't watched season 1, then I encourage you to watch that first, because in season 2 we are discussing little advanced level topics which are which you may not understand if you haven't watched season 1, and this topic particularly is very much full of jargons and technical details. So do watch season 1 first. The link to the same is given above. Now coming to today's video, all the education loan lenders except one or two of course offers floating interest rate, be it a government bank like SBI, BOB or Canara Bank, PNB, or be it a private bank like ICICI, Axis, IDFC, or be it an NBFC like Credila, Incred, Avance, Auxilo, etc. So in this era of floating interest rates, students are always concerned, what if their interest rate increases after they have taken the loan? So in this video, I'm gonna tell you how can you have control over your interest rate, and even if the lender changes it, how can you still ensure that you get the lowest interest rate. So let's start. But before that, if you're appreciating the whole idea of Loanflix, then please subscribe to our channel and hit that bell icon to get regular updates. So before I dig deep into this subject, you need to understand what floating rate means. So every bank's floating rate consists of two components. First is their base rate plus a standard premium or spread. Now the base rate refers to terms which you might have heard like repo rate or MCLR or BRLLR, CBLR, ABLR, etc. Base rate of a bank stays the same irrespective of which kind of loan they are offering. But what changes the interest rate of one product to another is its standard premium or spread. So standard premium or spread is different for home loan, different for car loan, different for education loan. So the final interest rate of a bank is its base rate plus the standard premium or spread. So for example, let's say the bank's base rate or MCLR is 7% and the standard premium or spread for education loan is 1.5%, then your final interest rate is going to be 8.5%. When you get your loan sanction letter also, you can find this breakdown information on that regarding the ROI. So on my screen, I'm sharing some samples of the sanction letters given by different banks. So in the first one, you can see that the total interest rate is 8.99%. But if you see below that, it is written that it is made up of 4% of repo rate plus 4.99% of spread. Now coming to the second sanction letter, again you can clearly see that there is 4% which is repo rate plus there is a spread of 6.75%, which makes the effective ROI as 10.75%. Now coming to this third screenshot, it says that the effective interest rate is 8.4%, which includes a repo rate of 4% plus a markup or standard premium of 2.5%, plus a spread of 1.9%. That's what it makes the total 8.4%. Now just in the same screenshot, if you look right below that, you can see that it is mentioned that the interest rate, the bank is entitled to reset the interest rate on a monthly basis. Now that's what exactly floating rate means. Banks are allowed to change your interest rate based on the change in their base rate or other components. Now coming to the frequency of this change, as per the loan agreement, some banks write that they will change it on a monthly basis, as you saw in the screenshot which I just showed you, and some banks write it like that they will change it every 12 months. Now what this reset means is that the bank will update your interest rate to the rate which is applicable as on that date. For example, if it is monthly, then 1 month from your loan sanction date, your loan interest rate will be updated, and from there on every month it will get updated. And if it is yearly, then 1 year from your loan sanction date it will get updated, and it will get updated every year from there on. So There is a possibility that in this 1 month or this 1 year, the base rate of the bank will change and standard premium or spread will also change. Important point to note here is that the banks can change its base rate or repo rate only with consent from RBI, which will analyze the various economical factors and also banks' financial health. And the same compliance applies to the NBFCs as well. But bank or NBFC can anytime change its standard premium or spread without any permission from RBI. That is totally their internal decision. So what happens at the floating rate reset? So when the floating rate is reset on a monthly or yearly frequency, it is generally only the base rate that is adjusted to the new base rate as on that date. Even if the bank has changed its standard premium or spread also within that frequency, reputed banks or NBFCs generally do not change the spread or premium for their existing customers. Implications of floating interest rate on you. See, the floating interest rate is like a gamble. It can go good or bad. But you as a customer should know what are the various factors which might lead it to going up or down. So see, the bigger the bank or NBFC, the lesser will be the fluctuations, because big banks or NBFCs will be stable and smaller economical hiccups will not bother them much. But if it is a small lender, change in investor funding or some legal case will reduce their financial health, and in turn they will increase your interest rate to sustain the tough times. So generally interest change, the floating interest rate increase in case of smaller lenders also happens only in case of crisis. But of course, there are some NBFCs, who played smartly. They give you lower ROI at the time of sanction and increase it after a few months or years. They play it like a marketing gimmick. There are such NBFCs, I won't name them now, but I have referred to them in my past videos. But at VMake Scholars, we definitely do an audit before onboarding a lending partner, be it a bank or NBFC, and we are very quick to remove someone, if such practices are found to be followed. Now, what if you researched all these parameters and then you took an education loan, but later still your ROI got increased? What are you supposed to do in that case? That's where we bring in the loan interest rate protection scheme of VMake Scholars, wherein VMake Scholars take the guarantee that even if your rate of interest is increased after you take your loan through us, we will ensure to get it reduced to the same original ROI. And in worst case, even if there had been some high level market crash or some major economical changes due to which all lenders have increased their ROI, in that case also we will make sure that your ROI is reduced to the minimum possible ROI which is existing in the market with any bank or NBFC at that point in time for your kind of loan. And VMake Scholars provide this service without any charges as usual, and even we do not let lenders charge any fee for this reduction in interest rate. So when you're taking your loan via VMake Scholars, there is nothing to worry about floating interest rates. You can start your loan process with us by requesting a call back using the link mentioned above or the link in the video description. And I'm repeating again, all the services of VMake Scholars are completely free of cost. VMake Scholars is funded and supported by the Ministry of IT, Government of India under their Digital India initiative. That's it for this video. I hope you found it useful and you could understand all those technical jargons. If you have any questions, feel free to put it in the comments below and I'll definitely get back to you. And if you appreciate the whole idea of LoanFlix and our effort in bringing this transparency in the market to you, then please subscribe to our channel and hit that bell icon to get regular updates. Please like and share this video with your friends and colleagues who might be looking out for an education loan. Stay tuned for my next video. See you then.
Don't forget to subscribe and click on the bell icon to never miss any updates from us.